All right, ladies and gentlemen, I hope you had a wonderful evening. It was an absolutely wild day in the market, and based on what China did, we now have a major puzzle piece and unexpected twist in the market. So China came out today. They unleashed a massive stimulus. It's not the biggest one, and we're going to talk about that, but it set off all sorts of industries. It led KWEB and a bunch of other China names going crazy, and sure enough, we started melting up, and now there are some big changes that just went down. And a couple of days ago, there's so many things that just after a couple of days, remember how the 50 basis points developed, then the Bank of Japan stuff. This is absolutely getting nuts. So I got a great recap for you. We're going to go over what happened with China. I'm going to share a bunch of plays with you and shout out Baba in the long term. And then I have everything else we're looking at, the keys, the plays, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning, baby. Run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, like I told you, there's a lot of things going on. And now today, after this China stimulus, it was a big event, and it's now one of these moving pieces that we were already juggling. Remember, to start off this week, this is the first full clean week following the rate cuts, and we're trying to figure out what kind of rate cut is it? Is it all because of the politics? Is it because the economy is perfect? Is it because we're about to get a hard landing? What is it? And now you have China coming out of nowhere with an above average or more than expected stimulus. Now, make no mistake, I'm going to get back to this point once we get to the end a little bit, but you have to realize that very big things are moving in the market. I know it feels nice. I'm telling you, man, the long term is absolutely loving it. I'm telling you, this is the big account, and it looks awesome, bro. I'm telling you, it's been a great time. But, dude, even the small account, it was at like 13,000 at the end of last year. Now it's at 20. That thing has gone up even 10% in the last week. And what I'm trying to tell you is I know the moves may feel exciting and it feels good, but you just had some pretty wickedly large things occur in the last 30 to 45 days. You had the Bank of Japan. That was a big thing. You had a little mini flash crash. Then you had the Fed with the 50 basis points, and now you have China coming out with a bunch of measures. So if you're not familiar, what they did, they cut the 7-day reverse repo, then they did a 50 basis point RRR cut. That's like their reverse repo rate. They cut that by 50 basis points, then 50 basis points on existing mortgages. Then they did a reduction on the down payment ratio for second homes to 15% from 25. Then they also said they might cut rates again another quarter or half by the end of the year. And then they came out with, this is the big one, they came out with this new like stock buying program, and essentially the PBOC is going to act as a buyer of last resort. So this was a lot of new stuff, and it was good, but this got everything going. But like I'm saying, man, you add this to what we have dealt with in the last 30, 45 days, it is hard to ignore what is happening, and you better pay attention. So that's the first key. And honestly, man, speaking of paying attention now, we will talk about some of the moves, but I hate to break it to you, all of this was foreshadowed on the watch list. I would hate to toot my own horn, but I've been making things color-coded. I've been trying to get y'all to really hone in and focus in, because this is crazy, but literally, this watch list was 11 days ago, if you guys were there for the live one, but literally, we put KWEB as the second play, and I was telling you, these talks of China's stimulus, they were circulating, and I said there's not going to be any effect unless we got the big one, and like I just told you there, everything that we got, it was absolutely massive. So you had a very wicked jump on this if you were paying attention. Hopefully you were prepared, but like I'm saying, today was a little bit more than expected. It's not like they threw the kitchen sink, but they definitely were more, I said the kitchen towel, I don't know, or maybe they just threw out the plates and the forks, but not the whole sink, but it definitely started to show a different China than we have seen, or a different Xi Jinping, whatever you want to call it. But here is the deal. Do not forget, this is why people were kind kind of saying like just don't even react to anything with China because over the last 3 years, every single China stimulus, every single effort that they have came in with, it has miserably failed. There is still, even after the stimulus today, there is a lot of skepticism towards what today's measures will do and whether or not it's going to move the needle. Some people are saying it will not move the needle on sentiment. Remember, the sentiment towards China has been piss poor for a very long time. Both the consumers and the people in China, all the way down to the investors. Remember, ABC, anything but China, people have not been a fan of it. It has been one of the most shorted trades on Wall Street. And then just don't forget, yeah, this is all good and it sounds good, but the problem with events, and even think about the Fed, and maybe you'll experience this way in the future at one point or maybe soon, but the whole idea is they have a huge demand hole. It's not like, yeah, you could do all of this stuff, but the consumers there in China have just been scarred by a wild flip-flop policy and everything else, so they need to recover demand. And yeah, you could do all of this stuff, but if this doesn't get people spending and things moving, China is going to have to do more, and then you're just back to square one. So it's very interesting, but like I'm saying now, this is leading into the final key. Obviously, you need to watch China moving forward, but I can't stress this enough, man. This is going to complicate things. I don't like it at all. It was one thing for the Bank of Japan. It was one thing how it matched up with Powell. Then Powell comes out of nowhere with a couple of articles, and now they're doing 15, and everything's fine and perfect, and then the dot plot, and then finally Powell's like, yeah, we're going to cut, and then they actually cut, and then the bond market's like, no, we're not going to price things in, and everyone's saying everything's perfect. It's weird, man, but now you throw in this China stuff. Just hypothetically, if China actually starts throwing the kitchen sink, if China starts going from demand hole to actually sparking things and now cutting rates, it is going to be more inflationary than not. And this is what you guys got to realize. You might watch some really wild melt-ups here, and until we see other things happen and other changes, to not underestimate global liquidity is massive. So I'm telling you, man, Bank of Japan is the only person right now that is tightening. Remember, everybody was cutting. The ECB, the Swiss, the Brazilians, now the United States, and now China. And that just is not sustainable. If you guys recall, I've told you in the past that usually if we're cutting, China's raising. If we're raising, then China's cutting. And China has been really, really weird in this last cycle. You know, when everybody was reopening, they didn't want to reopen. They went through deflation. And now, as everybody's going through this, and even as we're getting to our election, now they want to stimulate all of a sudden right after we start stimulating, and then Japan wants to tighten. I'm telling you, this is wild, but what this could do to both the currencies, the dollar, commodities, again, this inflationary wave, you have to watch out for it. This is what I was saying that was weird today, because if you asked me about everything, I was telling you, and I still stand by it, I lean more towards the hard landing. That's what I believe. I don't think the 50 basis points of cuts was good. I think hard landing, I was figuring demand was going to go down, but now you're telling me we're going to be stimulating. The rest of the world is going to stimulate. And then if China really goes back to like 10 years ago China, where they just pump Rooney, and now everyone's buying commodities, everything, then we might see a weird move. Or you might just get your hard landing, and then China is the reason why we get commodities running. Like I said, if commodities run during cuts, then danger, Will Robinson. So either way, man, you guys got to watch out for this, how this develops from here. It'll be fascinating for the end of the year and then coming into next year. But undoubtedly, this was a big event, and now we'll see until when any of this hype fades and how the market reacts. But don't forget, there could be a lot of global liquidity. And what I mean by that, everyone's cutting. It's easier to get money all around the world now. So think about that. But Chad, I hope you're locked in. I hope you're ready for all of it. But now, let us get into the plays. So, right off the bat, man, I got to start with it, bro. I think it's obvious, BIDU and KWEB. So, I told you about KWEB 11 days ago. It's this, don't look at the options, but if you are going to try to FOMO, I would be careful because unfortunately, KWEB has moved. Why I'm bringing up BIDU? Because I'm biased. Remember, I have a lot of BIDU shares. I've been flipping that. That did very good for me. We also have BABA in the long term, but literally go look at BIDU, then go look at BABA, JD, Pinduoduo, any of the other big China names, and you'll see BIDU is underperforming, and I really like this company. So if China does go nuts, BIDU is my number one winner, and even more now because BABA's ripping and everything else, and even the KWEB options are up, so I'm kind of liking it, but I'm not trying to hide it. I'm biased. I own this stock. I've really been liking it for a very, very, very long time. I'm down on it. Every time I go break even, it goes down too, so you know where I stand on it, but watch out. And again, if you want alternatives, KWEB, the ETFs, and even FXI, low-key, we were kind of talking about how the ETFs, they hit a lot harder than the individual names if there's a massive move like this. If you start getting 4 or 5% ETF moves, the KWEBs and FXIs, those are going to do good. So watch out for that. That is play number one. Then play number two, oil, man. This, I still have my longer MCL futures. Remember, I just did it, and I was just talking to you guys about this play. Again, it's on the watch list, and I don't know if you guys remember about like a month or two ago, we were talking about how oil is one of the best geopolitical hedges. Yeah, that's still in play, especially after it dropped. That's why I added it, but like, dude, go look around. There's a lot of these war headlines. Now you have the stimulus stuff, and this is what you got to realize with China. China is not priced in. Everybody was actually thinking the opposite about China. So if they find a way to like ramp up, and that actually, again, if we get more follow through out of China, I think oil can gain a couple of dollars a barrel from that alone. And then again, welcome to the demand wave. So watch out for that. That is key number two. And then finally, key number three, or play number three. I think I actually got one more, but yeah, the opposite, short China. So you'll see here, man. And again, I want you guys to have ideas, and I want you to understand. And it might sound funny because they're like, oh, hyped on China. What if it does this? But like, dude, every play has two sides, and like low key, you can take the under on this. If you think it's going to fade like every other one and it already popped up, like I told you, the skepticism still remains. The demand hole still is there. You can go and short the China plays and take advantage of this pop. And don't forget, China short is literally one of the most crowded trades on Wall Street next to AI and NVIDIA, and short the yen before the yen went crazy. So there's a reason behind it, but like I told you guys, if you recall, I said this not too long ago after the yen, just remember all of those crowded trades, they may become the big winners eventually. Don't forget, Wall Street hates you, my friend. So watch out for that. If you are going to take the under, comment. Let me know. I want to see. Let's see who taking the over and under on China, baby. What do you got? But now I got one more, and this one's kind of odd too. Like I'm saying, short the yen. So I've been really liking the yen, and I've been in a long side play. You're going to see I moved that around today, and I kind of moved around a little too quickly, but long story short, man, if China does recover, if China gets stronger, that can weaken the yen. Depending on what the yuan does, this could start moving the dollar. And essentially, if China gets back into the picture, carry trade dynamics are going to change. That's all I'm trying to tell you, bro. China was not in the picture. That's in now. If we have to deal with it, that could start moving things depending on what they do. So you even saw how the dollar weakened today. I don't think that's going to happen for long. I think it could even, again, just send us back into some of the inflationary stuff with the dollar getting stronger and prices up, and then all the other currencies. And then before you know it now, we're worried about China and the yuan versus Japan and the yen. But we'll see what happens. So those are the main plays. We will find out how all of it goes. But besides that, I did make two plays today. The first play, I grabbed more BIDU. I have a lot. I have like almost 1,000 shares that I'm down on. Again, I made a lot of money on them. I'm still down a couple of dollars now, but I decided to go for $120 of options. I like the hype. I liked everything behind it. I grabbed the January 150s. I think you could have got the 140s for around the same price at one point, but the spreads on these options are awful. That's what I hate. So if they do get free, I would make them free right away, but I grabbed the 150s, three of them, $40 each, 120 total, and then I closed out of my long yen. So after this, I did this in the morning, and like I could have waited. That's what I was saying. Like I could have definitely, I think I went a little too soon. I figured we would get some movement, but I am a lot more comfortable with this trade. I took a $1,600 loss on the long yen. That was right before Powell. If you remember, I was already down ahead of it, so I actually had more pre-Powell loss than actual Powell loss, but then I just went short on the yen, and now I'm down on it. I think it's actually moving around. I think I went back up. Yeah, so that's playing around even as I'm recording this video, but I like it. I don't care how it moves, but I like because I have long ZB. I'm long on the 30-year, short on the yen. I like this setup for now because I do think the yen could calm down. The yen has to deal with China. UEDA, do I think yen goes down too much? No, but at the same time, I do think now the bonds, after selling off 5 days in a row after Powell, they may get a bid. So we'll see how the balance is. Worst case, I could get killed in the middle ground. I will die between the spreads, a.k.a. I win on extreme moves. If nothing happens in 90 days, then that will be where my losses will reside. So watch out for that. But besides that, I would do an economic lesson, but I ran a little late here, getting in that swollenness, you know what I'm saying? So I think we're going to wrap it up there, and that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the writing is on the wall, but again, you got to count it. You got to know the value and then see how it is divided and be careful of walking on the roof, my friend. Watch out for that arrogance, but Chad, I love you. God bless you. Drink that water. Stay hydrated and healthy. I'll see you in the morning and